Hello traders, you're welcome back to the Forex Geek channel. In this video, we are going to be talking about something really um, nice. It's a topic that concerns the Nifty Bank Index, all right? So we want to look at the best Bank Nifty indicator that can give you an edge, all right, when trading the Nifty Bank Index. So whether you are an experienced trader or just getting into the world of trading, or if you have been a trader of Nifty Bank Index or you have no prior experience trading this index, this video is packed with tips to help you make smarter trading decisions. Alright, we want to cover essential information that can assist you in your trading journey. Alright, so let us get right into it. So why do we need an indicator for Bank Nifty? Okay, why do we need an indicator for this index? The answer is simple. Bank Nifty can be very volatile. Okay, and having the right tools to analyze market trends, potential entry points, and exits is crucial. All right, indicators can give you that extra clarity to understand the bigger picture and avoid emotional decisions. So first up, let's talk about moving averages. Okay, moving averages are one of the most popular and useful indicators for Bank Nifty because they smooth out price data and give you an idea of the underlying trend. So we're just going to be adding the 20 EMA to this chart. Okay, we're going to be adding the 20 EMA to this chart. We're going to be adding both the 20 EMA and the 50 EMA. So I'm just going to change this to 20. All right. And then I'm going to change this to 50. Okay. And we want to change the color for easy identification. All right. Okay. Now, for instance, the 20 EMA is going to be used to gauge short-term trends. All right. While the 50 EMA can show you the bigger picture. When the price crosses above or below these moving averages, it can signal a potential trend change. So you can use it to spot both bullish or bearish patterns quickly. So basically, when you have the price of Bank Nifty index drop below the moving averages and you have a crossover, the 20 EMA crossing below the 50 EMA, then you have a sell signal, basically. On the other hand, when you have the price of the assets cross above the moving averages and you have the 20 EMA cross above the 50 EMA, you have a buy signal. Okay, so take a look at this chart here. You can see how the price bounces off the 20 EMA when it is in an uptrend. We can see that we had an uptrend here, right? So you can see how the price was bouncing off the EMAs. Okay, and you can see on this other hand, when we had a downtrend, right, we had a downtrend here, you can see how price was also bouncing off, although sometimes it kind of pierces through the moving averages, but we see that price was getting rejected from the moving averages in a down trend. Okay, so these price rejections, those points of price rejections can give you, entry points. All right, and then when you have, for example, if you are in a sell trend and then you have price cut above the moving average, that can be your exit signal for a sell. So the points of bouncing off the moving averages and price cutting to the moving averages can be both entry and exit points. And remember, while moving averages are helpful, it's not good to rely solely on one indicator. All right, now next up, let us talk about the relative strength index. Okay, let's talk about the RSI. I'm just going to be adding the RSI to the chart. Okay, now the RSI is a momentum oscillator. Okay, RSI is a momentum oscillator. It ranges from 0 to 100, right? As we can see, from 0 to 100. Actually, as you can see, it ranges from 0 to 100, right? When you have the RSI value below 30, it shows you an oversold condition. When you have it above 70, it shows you an overbought condition. So now for Bank Nifty, many traders find that RSI settings of 14 are optimal for identifying overbought and oversold levels. Okay, you can use those levels to spot reversals. So for example, we can see that at this point we had the RSI value above 70 and it was crossing down. So that gave us a sell signal, and you can see how the price dropped all the way to this point. Now in this situation, you know, we had the RSI value very close to the oversold region, and then it began pointing upwards, and we can see that price responded accordingly, and we had a rally. Okay. However, remember that indicators are best used together. Okay, so don't rely on RSI alone to make a trading decision. You can combine the RSI with moving averages, for example, just to get stronger confirmation. Okay, support and resistance levels are also crucial. All right, it's good for you to set support and resistance levels. Okay, those levels of price rejection. Okay, it's very important. Okay, all right. Identifying these levels can help you set your stop loss and take profit targets more. Okay. Another thing to pay attention to is psychological levels, such as 50,000, 52,000. Those whole number levels can be points of rejections as well. Okay, those psychological levels are important to pay attention to. All right. So we can see that. Let me just add on the MA again. All right, I'm just going to use the 50 MA in this case because I'm talking about combining both the RSI and moving averages for better signal. So we can see that at this point, we had the RSI give us a buy signal, right? Because the RSI was close to the oversold and then it was pointing upwards, trending upwards. At that time, we had the price of Bank Nifty just bouncing off this support, and then shortly afterwards it crossed above the moving average. So we had an extra confirmation around here, right? Now let us look at a sell example. We can see that when the RSI dropped below the 70 level, we can see that price reacted accordingly, right? But then it was not until here before the MA confirmed the sell. So even when using other indicators for confirmation, you should know too that indicators are lagging. All right, that's the reason why eventually price action remains the best indicator. Okay, so that's why it's good for you to set support and resistance levels. Make use of both horizontal support and resistance levels, trend lines, chart patterns, candlestick patterns, because they can give you a signal earlier compared to indicators that are lagging. All right, so to wrap things up, the indicators such as moving averages, RSI, support and resistance levels are powerful tools for analyzing the Bank Nifty. By using this together, you can make more informed decisions and navigate the volatility with greater precision. Now remember, the goal isn't to eliminate risk entirely, but to manage it effectively. If you found these tips helpful, please hit that like button and don't forget to subscribe if you haven't already so you don't miss out on future videos like this. We are building our skills and knowledge here together, and I can't wait to bring you more insights. Thank you for watching and happy trading.